what actually changed, who benefits, and who might lose. Let's break it down. This is not a final treaty yet. It's a trade framework, but it signals a big shift in how India and the US do business. Overall, it lowers tariffs, improves market access, and strengthens economic ties. First, exports. This is where India sees its biggest upside. The US has sharply reduced tariffs on many Indian goods. Some tariffs that were as high as around 50% have been cut to much more manageable levels, like 18%. This makes Indian products far more competitive in the American market. Industries that benefit the most include textiles and apparel, leather and footwear, gems and jewelry, engineering goods and machinery, seafood, and marine exports. These sectors employ millions of people in India, so stronger exports also means more jobs and higher income. Agriculture, on the other hand, is much more complicated. India protected its most sensitive farm sectors like dairy, wheat, rice, and pulses from major tariff cuts. At the same time, Indian agricultural exporters benefit from better access to the US markets. Now, who benefits in this, you might ask? Well, it's spice exporters, tea and coffee producers, cashew and fruit exporters, processed food producers, and many more people. But there are some concerns. Some farmers worry that cheaper US agricultural imports could hurt local prices, especially because American farming is heavily subsidized. That's why there's political pushback and protest from farmer groups. For Indian consumers and manufacturers, lower tariffs on US imports can reduce costs. This includes energy products, industrial machinery, tech and manufacturing equipment, and once again, much more than that. Lower input costs can help Indian companies become more competitive, and in some cases, consumers may see lower prices. This deal isn't just about tariffs. It also strengthens cooperation in digital trade, supply chains, technology, and advanced manufacturing. Over time, this could attract more US investments into areas like semiconductors, data centers, and high-tech manufacturing in India. Because of improved trade access and investor confidence, major banks have already raised India's growth outlook. This deal supports higher GDP growth, better export performance, a more stable currency, and stronger global positioning for India. In conclusion, the India-US trade deal is a net positive for India, especially for exports and long-term growth. But the details matter. Farmer concerns, implementation timelines, and political resistance will determine how successful the deal really is.